Hey guys, please take the time to review as well as understand this disclaimer I'm going to give you. My name is Dantes Lindsay. I am the General Manager of Ducks Trading LLC, as well as the Lead Trainer of StockCraft. I'm not a financial advisor, nor a CPA, and the content I create is for entertainment and educational purposes only. I trade in my account, and everything I do is hypothetical in nature because it doesn't happen in your account. My experience with trading is not typical, nor does it guarantee that similar results will be obtained by you. I am merely sharing my opinion with no guarantee of gains or losses in investments. Remember, day trading can be extremely risky. You should be prepared to lose all the funds that you use for day trading. In particular, you should not fund day trading activities with retirement savings, student loans, second mortgages, emergency funds, funds set aside for purposes such as education or home ownership, or funds required to meet your living expenses. Further, certain evidence indicates that investments less than $50,000 will significantly impair the ability of a day trader to make a profit. Of course, an investment of $50,000 or more will no way guarantee a success. Please take the time to review as well as understand this disclaimer. Now, let's give the summary of what's happening in the content of the video today. I'm going to talk about how to start a day trading career for a beginner. Pretty much going to give you 4 fundamental or key ideas that I believe you should focus on. So let's get into the video. Okay, so this is everything we're going to cover just right away. So we're going to try to do this quickly. And you see all the points right here. I'm just going to highlight a few things that should be added to each one of these points. Now, first off, let's just read the numbers. Main thing is, when you start as a day trader and you're trying to begin your career as a day trader, you don't want to just jump in and just think that you can trade everything. That's gambling. Before you even do anything, you need to learn about the trading community. Understand what is trading. What's the possibility of, you losing all your money? What's the possibility of you gaining more money? I just want to say this like right off the back. Don't quit your job. There's a part of trading where you have to be confident and you have to be stable mentally. And you having that financial stability from a job helps tremendously in trading, no matter what trading level you're in, like whether you've been doing it for years versus you're a beginner. But especially when you're a beginner, you don't need to be full-time. You should start part-time and test the water and see if you actually want to jump in. Because at the end of the day, it's a leap of faith. It's a whole community, a whole different world that you have to gain a rhythm and a rhyme with. And if you don't have the ability to understand the rhythm or that rhyme, you probably shouldn't be in the industry. Now, that's number 1. Number 2, if you decide after, you kept your job, you learned about the trading community and a few other things, you should probably start saving up to actually make an account, to fund an account. You can paper trade until then. The reason you want to save up money, specifically at least a year worth of money, a year's worth of salary, is so it can give you a cushion. This cushion is another mental fortitude, stability factor that's going to help you in your trading. Now, having a year's worth of expenses, that means you have a cushion. You have room to slip. And that by itself is going to make you have a good attitude towards trading. You realize there's a few days that you can, take off from your job. Or if something happens, you're going to have, a safety net. And then that safety net gives you just a little bit more off your shoulders to learn a little bit faster. Added to that year's worth of expense, you also want to start building a goal, of an intention that you want to move towards when it comes to your trading. Just a little example. In my case, when I first started trading, I'm surrounded by people that are anywhere from in 5-digit, 6-digit, 7-digit, 8-digit figure accounts. And I'm just like, I'm losing a lot of opportunities for me to end up in a similar situation. And since I plan to be around this kind of community for a long time, I might as well learn it. since I was around the community for such a long time, I went into it a little bit too fast, and that led to some losses that were a little heavier than they needed to be. At the end of the day, I learned my lesson. It was a healthy lesson, but it was an expensive lesson. Now, the point where the willpower comes in is you have to have a certain level of confidence and a certain level of, I want to say, self-respect, to respect your own ideals and like self-worth and self-trust when it comes to doing what you need to do and having the right beliefs and values towards what's going to make you a better trader, not only for that specific trade or next week's trade, but the entire long-term goal that you have. And so at the end of the day, not only do you have to make a plan, make some rules and some principles, some beliefs and biases, you're going to have to make a goal, something that's just out of your reach, to where at the current moment you think it's impossible, until you break that down into steps that are small enough for you to take. Mine was 200K in a year. I started that back in March. Now it's April the next year, and only came up 18K. Now, everything in between there, I made 140K, but I lost 120K. When I review the entire year, there's over 85K that could have been kept in my pocket if I just didn't overtrade, or if I just sized down a little bit and then potentially could have scaled better later. End of the story. Now, that's where willpower comes in, to where willpower, confidence, the way I like to define that is your level of certainty in a certain result. You need that, I want to say, hope and imagination and ability to like be energized by going towards that goal and the challenge, and like finding joy in the challenge of doing that with efficient beliefs. Now, that's the end of number 2. Number 3, you need to make a plan. Now, with this one, once you make a plan, you stick to the plan. You don't need to make 5 plans, 10 plans. You need to make one plan and then stick to that plan. Then you test that plan. You can test it like using your actual account. You can test it using paper trading. You can use it doing simulated trades. Main thing is you want to test that plan, and if it's lacking, add value to that plan, make changes. The thing is, you just want to be committed to mastering a trading strategy, a trading bias, and a trading pattern, and make it a plan to it. At the end of the day, you're trying to make a plan that puts you in a position that has a higher probability of making money towards that specific pattern and your specific bias using your trading strategy. Because that's what you can do. That's all you can do at the end of the day, is put the odds in your favor. With that one, that's just pretty much saying resolve, which in my case, I define that as commitment. And commitment just means you sacrifice all the other potential things you could have did, which goes down into the biases and stuff. But before I go too deep into that, let's get into number 4. Number 4, find a good broker. That's just, once you find your trading bias, the type of trading that you like, whether it be day trading, swing trading, or like options, scalping, anything like that, find a broker that fits your needs. Like whether you need a place that has low commissions, or some that have better overnight fees. Some have like more borrows. Minimum, you want it to have, good customer service, nice charting platform, like an options chain, a platform that's like user friendly and just has the overall ability to carry out your trade. Now, just a little bit more detail, because this is already running longer than it should have been. Let's go back over the first 3, because the 4th one is kind of self-explanatory. So learn about the trading community and do not quit your job. So when you're learning about the trading community, you want to observe all the big players. Now, when I say the players, I mean there's retail. Those are the small people. Those are the sheep. Those are the people that are following the trends. They're using all kinds of catalysts. They're a flock, and they have a very fixed amount of capital when added all together. You want to make sure you're aware of the flock and you can be a part of it when it's in your favor, like for a temporary long, or you see the flock is below you and then you want to be on top of them in a short. Main thing is you just have to recognize that that's only one player. There's more players. There's market makers, there's hedge funds, and we call these the big boys. There's the Fed, the government. When it comes to these kind of players, usually everything is announced, it's scheduled, and you see trillions and billions of dollars that are like entering and exiting any index or ticker in the market. And there's usually a place you can go to understand either what happened, or you can preemptively make a trade based off of the schedule that's made by the hedge fund in a systematic trade they make on a specific large cap. And we're talking like Google, Tesla, Apple, like any industry that has like earnings and stuff that happens year round, that's all a part of a cycle. And this specific hedge fund or bigger player just always makes this kind of trade. If you ever see a pattern or something like that, there's potentially money there, so you can make it. That's just understanding your position as retail is you have very little power. And so your job is to figure out who's the shark and who do you need to get the scraps from. And then the more you're also aware of the tank, also keeps you away from getting eaten from the sharks. So it goes into that kind of category. Now, in this community, you also are going to have a lot of people you're going to respect. Respect them as you want to imitate a certain characteristic or symbol that they create. And so let's talk about like Steven Ducks. Everyone sees him out there as like one of the best retails in terms of like his result. They're just like, he made a lot of money. When I look at him, I'm seeing a person that's really patient. I'm seeing a person that's consistent, disciplined. And those are things that like he prides himself on. Then you go to other people that make, a lot of money, or they say they make money on Twitter and things like that. A lot of those people, they have similar characteristics where they're patient or they're consistent. The main thing is when you follow someone, you're not trying to directly follow them because you're not thinking at that point, you're a sheep. The ideal takeaway from the person you're trying to model is you want to take away the symbol or the characteristic that they're embodying, and you want to make that your own. And so you're not only imitating it, it becomes your own. Eventually, you get to a point where you'll understand who's real and who's not, who's noise and who's worth using as a quality source. And that comes down to like your news, your community, and other trader opinions that are worth listening to. At the end of the day, it's going to make a very abstract idea of what it is to be a good trader, especially around specific biases like long, short, or like a specific pattern and things like that. Main thing is you don't have to have a mentor, but it's better if you do get a mentor who teaches you the basics and then secondhand what to stay away from. When I say secondhand, I mean like you're watching them. What are they looking at? What do they think is important? You're not believing what they believe, but you're just looking at what they value and then try to break that down. Now, ask questions. And you want to be respectful with this. So like you want to ask questions. Don't just be super vague and be like, hey, tell me exactly how you made your money. Tell me your best thing and give it to me and stuff like that. You can do that. You could dance around the topic and everything like that. Chances are, even if they did tell you, you probably even wouldn't understand it or wouldn't help you unless you're just that good. But main thing is trading is supposed to be a conversation. You're trying to embody certain aspects of it that are going to help both of you. You're going to remind that person of the best parts about themselves and also probably highlight some faults in them once they have to use willpower and strength to like dig up stuff they learned in the beginning. And then it helps them, pretty much come up with like a counter strategy to like anybody that could like mess up their strategy and then variations of it. But main thing is you want to go back and forth. You want to be respectful with it. Don't demand anything, because at the end of the day, everyone in trading is by themselves. This is a community, but it's a community of solo players, like wrestling or track without the relays, something like that. So next one, I'd say save up year worth of expenses and willpower. Now, the money that you put in the account, that's money that's not supposed to be used to pay your bills. That's not supposed to be like your kids' tuition. It's supposed to be money that you can afford to lose. Now, I'm not talking about just like $500. Like, I'm talking about this could be your potential 401k kind of stuff. Main thing is you want to put in enough money to where it's worth investing, it's worth learning and like flipping, but not enough to where it's going to cripple you financially. Like, all money that goes into this, you should just already see it as gone and then treat this as a hobby or as you're already retired. The only time when you should really put a heavy amount of money into this is when you become good at this. Until the point that you actually understand and become profitable, just stay under 5K. When you start 5K, like 3 to 5K account, and you turn that into 25K, that's when you can just keep getting those accounts below like 25 or like 50K and just make separate accounts with that fixed amount. Anything above that, you're going to have a completely different plan for each different level. And when it comes to the willpower in that year that you're saving up those expenses, you're going to have to resolve yourself to like fast changes. And what I mean by that is one day you could wake up with 5K account and then you make a big win. And then you end up in a 25K account. Each of those stages, like from 5K to 25K, you're going to have to get used to that. Then from 25K to like 100K, you're going to have to get used to that. Then, you know, the higher you go up, it's going to be a really fast pace and you can lose it all at once. And the thing is, even when you lose like all that money, that loss will put you in like a certain despair state. And you're going to have a certain ego or pride in the amount of money you make that you'll never be able to control how much you can actually like win at a time on average. And if you can't actually control that ego and grind back up to your actual level, not your just level that you just happen to make money, then you're going to have a lot bigger losses and a lot smaller gains than you should. Main thing is you want to build attachments efficiently. And to do that, you need certain beliefs. And you need beliefs in like patience and consistency and other values that are going to add value to your plan and to your trading and to yourself. And then things that are going to make you better at your job or this hobby, whatever you want to call your trading career. Because you want to treat it like a job, but you also don't want to treat it like a job because that's a different type of pressure. But that's a different story. Last thing I want to say is when you make a plan, you want to commit to that plan. Commitment pretty much means sacrifice every other thing around your trading window. Now, I'm not telling you to throw your kid out and just be like, hey, I'm trading. But like if there's a position that you know it's going to be like the best trade ever and like this can put him through college, if this trade goes through, he might have to get out, or he or she, like whoever the kid is, got to go. But that's just me. It's only for like a day, unless it's like a different type of trade. Main thing is you're going to have a life to work balance when it comes to making your plan. And that's going to be built around not only your bias, your type of trading, and then the patterns that you choose to trade the most, but also the variations around the pattern that you're having. Now, with each one of these patterns, there's going to be like skewed offsets and just variations of each one of the patterns. Your job is to figure out where is the opportunity window? When does this pattern break? When does it open? When does it appear? And then find the best position, like the best tactical position in each variation. And your job is to recognize the pattern before it happens and understand the criteria before it happens. And then once you see that criteria is like met, then you're just like, okay, I think it's variation 3. Then you go in the place and you make a educated bet. And you're just like, okay, I'm so confident that I believe this amount of money. And then that amount of money that you have is based off of your plan, based off of your long-term goals. If you're trying to make what, 200K in a year, but you started with like a 25K, 30K account, and then you're doing like 10K trades per trade, you're going to do like a max loss of like 3K. Yeah, 3K or 2K. Yeah, that sounds about right. Because like, if you have a 30K account, you divide that by 5, you're using like a fifth of the entire equity. That 5K, you use margin, and then that puts you at 10K buying power. You use that 5K to pretty much have a max loss of anywhere from 2 to 3K, or at least that's what I did. And average win, you'd be looking for something like 3K. Average loss, you can minimize it to like 10%, like 1K. Main thing is you just want to have a standardized way to track your entries and exits, something that you can simulate, something that you can standardize. Like when you miss a trade and you're just like, where would I go in? This is going to help you recognize the pattern and recognize the variations and recognize where are the early shorts, where are the late shorts, where should I be technically, and how off am I from that point. And that's pretty much it. All I wanted to say for now. We'll just call this one the summary. Just to go back over it. Yeah, get a trading community. Don't quit your job. Save up a year's worth of expenses and resolve yourself to finishing what you started. Make a plan that you're going to commit to mastering a single pattern, using a single trading strategy while choosing a bias, whether it be short or long, learning one full side of the coin, like long, and then you automatically know what's going to happen on the short, because a lot of the times people are looking for, you know, what the opposite side is not looking for. And then last one, find a good broker that fits your goals, and we'll leave it at that. All right, guys. So I talked a lot again, but if you like what you saw, please like and subscribe, and I'll see you in the next video. Peace.